We're going to be diving into the Fed meeting today, of course, how this affects the markets and break it all down for you guys. You guys should love this one. My name is Paul Barron. Welcome back into Tech Path. Joining us live, of course, we appreciate that. And for you guys, if you're not out there in our community, we'll talk about that in a second. But I do want to thank our sponsor, and that is iTrust. iTrust Capital is a great place to get started. You guys can, of course, join and get in on your own crypto IRA. And the really cool thing is you can go gold, silver, all sorts of altcoins, Bitcoin, Ethereum, pretty much anything you want in the digital asset space, all available over on iTrust Capital. All you have to use is just to use the link down below. You get a $100 funding reward to get started, and off you go. Before we get started, guys, I want to remind you that we have a community out there on Telegram now. So just go over to the link down below, and you can actually join the Diamond Circle on Telegram. I'm actually in there quite a bit. We've decided to go and move back to Telegram for our group. So thanks to all the thousands of members that are in there now. Jump in on this. I think it's a great place to kind of get additional connection to us and on our team. All right, let's take a look at a couple of things that are happening right now. The Federal Reserve did pause interest rate hikes today, so it remains at the 4.25 to 4.5. I think this is the thing that we have to look at is how this plays out into March. Now, we are going to stream Chair Powell and the press conference here in a minute. We'll take a look at that. But if you look at how the FOMC works and the Board of Governors and really the structure in which suck in data, they're looking at obviously inflation data along with economic indicators that really play out. The surprising point, I think, that still to me is that we saw the rate cut back at the end of last year. I think that's the factor. Did not realize that they thought they would do it, and they did. And of course, we saw an aggressive one, and I think we paid for it a little bit in terms of inflation spiking, even though inflation has now started to come down slightly. So, sorry about that. Started to come down slightly. So anyway, I think this is going to play out interesting for the month of March, which will be the next time we see Chair Powell jumping into this. The big question is going to be who's going to win the battle here, and this comes from a Trump versus Powell scenario where you remember I think we played a clip here on the show where Chair Powell was asking, or they were asking Chair Powell, what if Donald Trump asked him to step down? And he simply said no. And no matter what, no. That was a short answer. And I think that, whether you like it or not, I think that may upset President Trump. We'll see how it plays out here. Other things that are happening in the market right now, as you guys know, we've seen everything from DeepSeek this week, which really started to impact the crypto market. Primarily, I think, because I still believe AI and crypto locks connected. We're going to see so much in the way of AI agents, as well as what we're going to see from the AI usage in crypto as a whole. And when you factor that in, the number one S&P 500 that you have to watch, of course, is NVIDIA. And of course, right now, President Trump is considering restricting NVIDIA's chip sales to China amid the DeepSeek competition. And of course, this would be the factor, because if this gets into a scenario where this is a national security risk, this is the kind of impact that you see. That's the NVIDIA stock right there, guys, going all the way down to 120. So now, granted, some of this was already impacted by what was going on with DeepSeek. And if you are a believer that AI is going to be the narrative for crypto, just, let me know down below in the comments. Tell me what you guys think about AI's narrative in terms of pushing crypto going forward. Don't forget to ask some questions over on the side. We'll try to get to some of those as well. And if you're not subscribed to the channel, by the way, this is the first time we've live streamed since we hit the 1 million mark. So thanks to all you guys subscribing to the channel, and I think now one of the fastest growing crypto channels out there, especially here in the U.S. Fed is set to hit the pause button. Rate cuts for now. Here's a little bit of the impact on the money. There's a few points they hit on here in the article. Most economists predict that the Fed is going to hold. That happened. Next rate cut may not occur till central banks meeting in in May. And that, of course, I think is going to really start to set the markets going forward. Personally, I think this is good for the market in general, especially as we start to see data coming in on inflation. If President Trump is successful in reducing inflation this could be a good catalyst for crypto coming out in the next few months. The other thing that you have to really look at is just where this is going to come from. Because remember, credit and inflation are still the main drivers around retail. Retail trades are, I think, still going to be very challenged in being able to come into the market if we continue to see some pressure there. So credit cards, home equity lines, credit, other, all providing a little bit of fluctuation to inflation pinch consumers and their businesses, which is another factor. I think businesses have started to slow in terms of hiring. And if that does affect our jobs numbers, then that would be the other. Now, tariffs, of course, are the other big scenario, along with mass deportations. All of this is going to have market effect, and you have to be ready for that. So it's going to be a somewhat volatile. I think if you're a trader, this may be the best time ever to be in crypto. If you are someone that is more of a buy and hold, then you have to look at the narrative. Is this something that you believe in long term, 2-3 years out? Or is it something, hey, I'm going to go ahead and write out 2025, see how this market goes, and continue, my strategy around diving in and out of crypto and investments, whether it's Bitcoin or altcoins overall. Other things we're going to be looking at, of course, is the Fed decision in March coming up. Right now, people are saying on Polymarket that they think it's going to be no change again back in March. So this could stretch out all the way into May going forward. I've got a clip here for you, and this clip will get into Trump and whether or not he can put some pressure on Powell to hold the line on inflation, or on rates. Take a look.
The interest rates will come down.
You said that you would demand that the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
I love that. Yeah. Yeah, I expect him to. Well, Powell versus the markets, what to expect. We're going to see some things. Two-day policy meeting obviously is up now. And I think we're going to see some scenarios play out here, obviously with a struggle between President Trump and Chair Powell and the Fed. The other thing that a lot of people are pushing for is ending the Fed. Remember, there's been a lot of people. We had Dr. Ron Powell on this week, who was a very big proponent in that. Go back and watch that video of what he talked about in terms of the Fed. Investors now are focused on the post-meeting remarks. That's the big thing that comes from this live stream today, is it really boils down to how does Powell talk to the reporters, because this will give an indication as to whether or not, I anticipate he's going to say we want to look at more data. That's his usually out. But it could get into a scenario where he does give some signals on whether or not a pause or a rate cut could be in line for the next meeting. And I think that will be the question mark that everybody's looking right now. So Wall Street's watching this pretty closely. Of course, corporate earnings are coming in from tech companies that we already saw. Meta, of course, was this week. We'll continue to see some of that. Microsoft and Tesla also. And I think if you look at the AI scare from DeepSeek and what happened to the Mag 7, this is a interesting point, because it gets back into the thing I was mentioning the other day on the show, is that this is a very sensitive market. If we see basically a no-name AI platform come in and make such a ruckus within a market that has been building over the last 18 months. And I think that's the thing that is just staggering to me, is the fact that that impact did occur. Now, granted, it's coming from China. Do we get some potential implementation from the U.S. government that would start to protect AI companies? And I think when you look at national security, that still could be a factor. That, of course, I think would hurt NVIDIA, which could hurt some of the crypto market in general as well. So we're going to continue to keep a close eye on all that. Other things I want to get to, I see your questions coming in, so good stuff there. We will get into some of those. Gold is telling us something. That's the other factor you got to be watching right now. Amid this volatility, gold quietly hit a record high this week, so now up 35% in 12 months. So looking more like a crypto scenario. And I've talked to Andy Schechner a couple of times, and he's a big gold guy, but he also looks at Bitcoin and digital assets in general that can be the underlying currency, so to speak, when you look at trying to back the dollar. And if you look at what a strategic reserve might look like, and we're starting to see more and more states come in with these Bitcoin strategic reserves, and/or I'm looking for the first crypto strategic reserve that could possibly include tokens like XRP and some of the US or American-made companies out there that, of course, could be in a strategic reserve if you think about blockchain as a whole. So if I am betting, I'm betting it's going to be something like an XRP, possibly an Avalanche, something of that nature that would start to move in there, Solana, etc. I know I got a bunch of questions coming in. I will try to get to some of these, I promise. And we are going to stream Chair Powell live. If you look at another announcement here, this of course was Trump Media announcing his expansion into financial services. So TruthFi is now out there. A couple of points that they get into is they want to diversify this the company's cash and cash equivalent reserves. The way they're going to do that is the board approved the investment of up $250 million in custodied by Charles Schwab. And of course, these funds are going to be allocated into a variety of things like ETFs, et cetera. But Bitcoin and other similar currencies, keyword, similar currencies or crypto-related securities would be involved in this. So that's another big win when you look at an administration that is somewhat tied, even though the organization that's running it is not, directly related to the president, not making those calls. But when you look at what's happening with World Liberty, when you look at what's happening with TruthFi, all of this is leaning into a positive spin for crypto in general, and also the U.S., I think. And if you look at some of the related companies, this is just one of the companies that Trump has out there, his fragrance company. They're now offering to where you can pay on Solana Pay with, Trump coin. So they get it. They understand. I think there's going to be some interesting moves coming forward quickly around all of this. Other things, of course, you got to look at is watch where the moves are coming in from. And that's, of course, the campaign managers. We've seen this. This is former New York Fed president is going to be joining Coinbase as an advisor. We've already seen Cinema also stepping in as an advisor with Coinbase. So I'm not a big fan of that one. But the point is that there's a lot of strategic moves that are happening in crypto right now that I think are going to paint up into a very active altcoin season and a very active market going into the spring. So be on the watch out. I think next up, we could be looking for some interesting moves here pretty quickly. Other things I want to jump onto. This is an interesting statement here. All right, so you guys know that the U.S. is trying to basically catch up, right, on crypto in general. But when you look at investing as a whole, most of the time, if you're an investor today, you probably know what the requirements are for you to invest in something, especially like a VC. In many situations, there's a thing called an accredited investor. So basically what you have to have is $1 million in net worth or an income of over 200K. So that basically shuts out about 80% of the market. You can kind of see some things that they're identifying there as the accredited investors. This is the thing that is the problem with investing, which is why I think we're seeing now the potential of crypto being a use case for raising capital for small business. And this is a problem because when you look at the way that most small businesses raise cash today, they're going through a process through the SEC. It's called a Reg D, and that's up to $1 million. And that in itself, I think, starts to get challenged here with the amount of success that we've already started to see in many of these meme projects and altcoin projects that have been able to generate revenue to create and stimulate economic growth, because that's really what it boils down to. How many businesses can you create, because that creates jobs? How many businesses can you create that creates GDP? All of that could be ushered in with crypto. So chief use case, meme coins, whether presidents, stocks, frauds, you name it. Understand that this revolution is coming, and I think the United States could be at the forefront of it right now. I think we are waking up quickly, and if you think about all of this happening before the end of January, some people thought this may not happen for months, and here we are, end of January. Now, I'm not happy with the fact that we haven't got a strategic reserve outlined, but with the crypto czar, with David Sachs, they're looking at it now, so hopefully we'll have a response pretty quickly. And the thing about Sachs is he's an investor, but he's also a businessman. He understands speed to market is going to be key. So definitely. What do we have here? Elmer Fudd says maxis are crying over XRP. Definitely are. Did anybody see the Jack Mallers video this week or yesterday and today? They continue to be pouring those out there. I look at it this way. I just don't understand why there is so much just hate for some of these other projects. So it just doesn't make any sense. Vlad's also kind of pushing on this, as you guys can see right there. Chair Powell has not hit the podium yet, but he is hitting on this as well, saying, hey, you got to update these investor rules to allow equity tokenization for startups. That's the point I'm getting at. If we get startups, remember, in the United States, If you could create a mechanism in which startups could move to market that fast with being able to raise capital, man, this would absolutely open up the market in terms of growth. So a lot of opportunity out there. Future trading is also launching on Robinhood, so more good news in general. I think that's good for the market. And Ripple CEO Brad Garlinghouse also revealed he discussed with President Trump making XRP a strategic reserve asset for the U.S. So that's a big one. Let's go to the Chair Powell.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, so
Steve
nothing
Leishman from CNBC.
super unexpected there. This might be good. I want to hear what this question is,
In
though.
Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings, and you see we don't overreact to too good readings or too bad readings, but nonetheless, the last couple of readings have suggested, more positive readings. So I think policy is well positioned.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer run, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
we're looking, it's more the way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen.
All right, so he's getting in on a couple of statements here I think are positive for the market, and one is that they are very cautious on this, and I think this is what we're seeing obviously on the charts as you're probably watching right now. So that's a good sign for the market in general. And the other thing, he did not want to pick a fight with Trump. That's a positive. Let's go back to it.
You talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. with the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good, but if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of
Hope that he gets let's hope he gets a statement in here about the strategic reserve, crypto reserve. That might, hopefully there's some statement here. Let's see if he brings it up.
Mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
I can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes, never, or do you just often really comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. if we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
So good news, I think, somewhat here, and that is that Chair Powell has been very conservative on this, which is what was expected by the market. No surprises there. Also, I think that the market was anticipatory here as well. When you look at the kind of indicators that we're already seeing from the markets in general, whether it is inflation, what we'll see in the jobs numbers that will continue to report through the first quarter, and I think also the big factor is the impact on how this administration is affecting the financial markets, which crypto is going to be the one that I think is affected maybe the most now that Trump is in office. So a lot to go to. Let's go to a couple questions here. So in short, good press conference, no surprises. That's good for the market. I think this is good. All right, we're going to pump soon. I think we could be in store for some interesting moves here. Maybe we finally get off of this sideways movement that the market has had over the last couple of weeks. We'll see. XRP is going to pump the appeal or dropped or settled. If that happens, yes, of course, we're going to start to see movement there. The other thing with the XRP scenario that could play out here is that it is included in the crypto or digital asset strategic reserve. If XRP, an American company like others, that could be included in this, as Trump is kind of alluding to in the executive order that he did. Remember, if you go back and watch that, when they actually signed that, which was not necessarily the executive order to do it, but to get out there and start the research for it. And of course, listen, David Sachs is in the middle of that, so he's a big Solana guy, so could be going that direction. Does NVIDIA chips and DeepSeek hurt render? That's a good question. We don't think so, because when you look at the race to reduce costs, which is the challenge, I think, and that's really what DeepSeek kind of did. It dropped basically a big rock in the puddle, and I think now we're going to start to see some different approaches toward a lot of what's happening both on the NVIDIA chips and also how many of these companies, the software companies, are going to be utilizing them to essentially build next level. And I think if you look at the potential for a reduction in costs, the one thing that will benefit in cheaper chips and faster speeds is going to be DePIN. And when you look at decentralized physical infrastructure, Render is at the top of the list. So it's still, I would say, is my number one play for DePIN. What happened to AVAX? So much potential. You know, it's been a little bit sideways. I think AVAX is, listen, they're due. The key here is, of course, gaming was the narrative. The AI scenario, I don't know that they've completely got a really good narrative behind that just yet. And also, I think that you look at the performance of Solana and what it's been able to suck up, that I think has been the miss for Avalanche. And Avalanche, of course, you know, they can fix those things with doing some more strategic stuff out there. All right. Okay, well, I got to talk about this, and that, of course, is our super chat. Nice move there, guys. I love that Cardano always works in a listing on here. But Cardano was up following almost all the altcoins as well. I anticipate, listen, Alex Becker's even buying Cardano now. I think he actually wants to love on Cardano a little bit. So we'll see. Graham Bishop says diversified crypto reserve will be big. I agree with that. Diversification will be good for everyone except Bitcoin. Bitcoin, I think, it'll be good for Bitcoin, the asset. It'll be bad for, I think, the Bitcoin maxis. That in itself, the personalities will be upset with that, I think, in general. Solana is what happened to AVAX. That's what I just said. Carl, you and I are on the same page, my man. So many Bitcoin maxi tiers in here, I hear. Anybody buy the BMT token? I'm kind of curious. Over on XRP, did you set a trust line and go out there and do it? I don't know. That's an interesting one. Don't sell it, man. It's flying. Don't sell it. Sideways, all alts are down massive. Yeah, for sure. Down in the sense, when I say sideways, in the comparison, I mean, if you go back to the daily here, we'll just take a look at, let's take a look at Solana. This is the kind of sideways action, really, that I'm talking about. If you look at that range, even from the range of about 260 all the way down to 182, this has pretty much been where Solana has been living. And a lot of that, I think, is still, granted, 260 was the high. If you look at that in performance-wise, but look at, if you zoom out on Solana, and let's go out to the weekly right here. I mean, look at those gains, guys. You have to kind of look at that market position right there. What were you up on Solana if you bought that low? Where are you setting in there? Oh, no, nice 1,600% gain. Not bad for you guys. Render is a winner for sure. Ondo, we've been in and out on Ondo. We trade it, but some of the team still likes it here, and it's up right now, so good for them. When ETH to 10,000. Listen, ETH is the real question mark here going forward, is do we see Ethereum really start to run? Or, and this is a question I posed in our Telegram group, did Solana take the role of ETH in this altcoin season? Are they, meaning they, Solana, is that going to be the asset that pretty much sets the tone for the next bull run when it comes to altcoins in general? Crypto University, AI crypto will pump next week. Why do you think that? Why do you think AI crypto pumping next week? Is there something happening specific that you think will go, other than earnings we see from the big seven? Maybe we'll start to see a little bit of movement, maybe because of the DeepSeek scenario that could play out. Maybe we'll start to see some market retaliation with that. Don't know. Jupe, yeah, that's a big one. If you're not on Jupiter, if you guys have not tried Jupiter, you should try it if you're in the Solana ecosystem. It's a good platform. Don't forget, you've got Sui doing some big things because they just flipped over to Solana. That's a big deal. That's going to be huge, I think, for the Sui altcoins. So pay attention to all what's happening there. And I think you've got some other projects out there that are really on the verge of doing something big. I still believe that Polkadot, if they catch a flyer on the TikTok situation, we're going to have that team on. In fact, not the Polkadot, but we're going to have the Frank McCourt on to talk about that and what that's going to look like if we can get a potential U.S. company in as a Polkadot, or I should say as a TikTok owner. A couple other things. What about virtuals? Man, it has really taken a hit over the last little bit, but I still am a believer in it. This is one I own. And I'll jump down here to virtuals real quick. It's down on the chart. You can kind of see, we'll go out on the weekly right there. So pretty hit off the high, which was around $4. So many people have exited that, which was a good move up. Not a bad deal because that was coming off of around 84 cents, or 8 cents. So that's a good one as well. UFD. All right, there. Wow, Ron's token is in the comments. Yeah, unicorn. It's another one. You know, again, that's a Solana project. We've continued to see that. We've had Ron. We're going to try to get him back on the show because I think he has an interesting take on meme coins. And the other thing is maybe that is a theme that's setting up on the meme coin cycle. If you look at UFD, Trump, and many others, all of those definitely in there. I would agree with you. Yes, Mr. Snickers, Trump family is heavy in ETH. And if you look at their investment group with World Liberty, there's a lot, or I should say, there's a lot happening in that side of things when it comes to Ethereum, and especially the assets. If you go in and look at their overall portfolio, not only just the assets themselves, but the NFTs, the ecosystem, all of that. So cool. VVV, yeah, so that one got, you guys know what happened there on that. We got a listing on Coinbase. It kind of, I would say, sideswiped virtual a little bit. There are some interesting moves on that token, which I did not know until the research team told me that, and that is that is a token of an infamous Bitcoiner out there on the market. So, you know, there's some interesting things happening right now of who's getting listed and who's not getting listed. I think that is going to be the race to the winner. And of course, remember, Kraken came back and listed virtual kind of as a bit of a run. Thanks again for the super chats there, eStock, for sure. You know what? Okay, that sucks. Okay, I'm not going to, yeah. I like you. I see you, William. I hear you, man. I hear you. I hear you. All right, guys, make sure and subscribe to the channel. And as I said, if you're not in the Telegram group, get in. We'll leave a link down below if you're catching this after the live stream. And if you are catching this after the live stream, make sure and hit that little icon down there. And that's going to give you notifications of when we go live. Let's go to our last thing, and that is the poll, and see what you guys think. 24 hours out, Fed crypto market will have, tied here, crashed, pumped, and remained the same. So I'm going to say that this is bullish. All right, when you look at about almost 70% main or remain the same or up, that's a bullish indicator, and it's coming from thousands and thousands of you guys out there that are watching this market like a hawk. And believe me, we listen to you. So drop the comments down below. We love to hear from you. And of course, if you guys are not following me on X, it's just @Paul Barron. I'll catch you next time right here on TechPath.